Good morning, everybody, and welcome to today's webinar. I can see there's a number of participants still joining, so we'll probably give it one more minute and then we'll start. Good morning, good afternoon, and good evening to everybody joining us around the world today for what's the first in a series of, at the moment, 3 webinars that Ligentia will be holding in partnership with our partners Vartan Consultancy around the topic of Brexit. I'm James Paybody. I'm the UK Sales Director for Ligentia in the UK, and I'll be facilitating today's webinar. Shortly, I'll be introducing you to Neil Bird, and he's a senior supply chain consultant from Vartan Consultancy. Now, Vartan are a partner that we've been working with for some years. They specialise in customs compliance, health and safety as core focuses. And we've worked with Vartan as long ago as a number of years back when they supported us on our AEO accreditation. We've worked on projects related to customs compliance and consultancy with our customers, and also obviously been discussing all things Brexit over the last couple of years together. I can see there's a large number of attendees on the call, many of which know Ligentia very well, a number of which know us less so. And so as part of, I guess, framing today's session, I wanted to touch on Ligentia just as a high-level view of our business for those who are maybe a bit less familiar with ourselves. Just looking to move slides here, if you bear with me. Here we go. So today, the session will very much take a factual theme. We're clear to present facts as we know them today, not to spend too much time, if any, on the presentation side on speculation as we approach the end of the Brexit transition period. I'll be speaking for maybe the next 5–10 minutes just to frame the session before handing over to Neil Bird at Vartan. And Neil will talk about Brexit planning today, so where you should be at this point in time as we near the end of our transition period and what you should have in place. So Neil will be spending about 20–25 minutes covering that area and talking you through a number of slides which hopefully provides you with a good level of information and insight. Then we want to leave a good 20–25 minutes for a Q&A, and that's to make the session as relevant for everybody joining as it possibly can. You'll notice on the Zoom function that we've got here, I don't know how many are familiar with Zoom, at the bottom there are a number of icons. One is a Q&A icon, so if you have a question now or anywhere through the session, if you click that Q&A icon, ask the question, it will come through to the panelists, and we'll look to try and pick as many of these up at the end of the session once Neil's finished his slides. Okay. Right. So to, I guess, frame the discussion on our side. So Ligentia, we are one of the largest UK independent supply chain and freight forwarding companies. We're 24 years old. We operate a global network, and we also have a number of own branches all up and down the UK. As you'll see on the left of the chart, We operate across all sectors. Not so much a sector, but this year we have operated a rapid response team, which has been very much busy and very much involved in the global movement and support on PPE and medical goods, and continues to be so in light of the coronavirus crisis. Across those sectors, we work with customers in a freight forwarding sense, in a supply chain management sense, and essentially customers with a whole manner of requirements across global markets. The core services we offer will be ocean freight, air freight, 3PL, which is warehousing, rail and road. And around all of this, you'll notice at the bottom of this slide, we have a little mantra called data-driven supply chains. And the data-driven supply chain feeds from the technology and the people that we wrap around our customers. So technology as a business to Ligentia is absolute key. It's key for customs, it's key for all forms of operation, and it falls within two customer-facing brackets. So we have our own proprietary software, Ligentics, which is our supply chain visibility and exception platform. And that is a system which very often is integrated within our customers to provide SKU and PO level visibility. And from that data, we can drive agile, tactical, but also strategic decisions within the supply chain, provide real-time visibility, and drive analytics, KPIs, and areas of ongoing opportunity from our customers. We have a light form of Ligentics, which forms a track and trace tool with basic reporting functions that, again, all of our freight forwarding customers are integrated with. The other side is our new customer hub that we launched this year. And again, in line with our tech focus, the customer hub is available to customers and non-customers of Ligentia. Our customers are able to work with what is an integrated hub, providing a 360-degree view of their supply chain. And within our customer hub, they can find all their latest communications with Ligentia, news, knowledge hub, FAQs, analytics, documents, and it also gives our customers the ability to interact with Ligentia through the old-fashioned means, but also now through WhatsApp, WeChat, particularly important with suppliers, live chat, and submitting request forms as well. As we move towards the customs theme, I've mentioned the support that we receive from Vartan on the consultancy front. Ligentia are an AEO customs broker. In a general year, we will tend to process around 35,000 customs entries ourselves. And not only CFSP, but also this covers IPR, customs warehousing, home use, export OPR, permanent export, NHS PPE entries this year in particular, and entries and customs activities for all forms of commodities ranging from PPE, food, homewares, through to garments and armaments and explosives. This year, in preparation for Brexit, we have bolstered our customs team. We have a dedicated customs team within our business. We have badges at all the channel ports in the UK, and also we have employed a lot of RPA in the background to automate what were formerly manual processes, which means we can free our customs personnel up to the more value-adding tasks to support our customers. Okay, so moving towards the next slide. So it does appear to be a slight time delay, but it is on its way. Right, not to depress the UK contingent joining this call, as we are on the eve of lockdown Mark II here in the UK. But this isn't news to anybody on the call around the world. Obviously, there's been a lot of global disruption and change this year, which we've all experienced professionally and personally. The global pandemic has caused across the freight and logistics market capacity issues, rate fluctuations, both across air and ocean in particular, as well as equipment shortages throughout sourcing locations, not only UK port delays, but port delays and infrastructural challenges around the world. So acute challenges on supply chains globally. We'd be forgiven for thinking that Brexit planning has again creeped up on us as a slight consequence of this, but we're now at that point where Brexit is absolutely front and centre. I mentioned before that the end of the transition period is the 31st of December this year. And to that end, I'd like to introduce my colleague Neil Bird from Vartan, who will be talking to us specifically today about how we plan for the end of the transition period in a little under 2 months. So Neil, welcome to today's webinar. If I can hand over to you to pick up the Brexit piece of today's webinar, and I'll be speaking to everybody once you're finished in 20-25 minutes or so for the Q&A.
Thank you very much, James. Good morning, everybody. Thank you all for your time for joining us this morning. And I'm hoping that you're all going to enjoy the session and it will help in some way with your planning for the end of the transition period. Apologies, I'm just getting control of the screen. Sorry for the delay, here we go. From the 1st of January 2021, the transition period with the European Union will end, and the United Kingdom will operate a full external border as a sovereign nation. This means there will be a requirement for customs declarations on all goods moving between the UK and the EU, and that is irrespective of whether or not we have a trade deal. Some people have suggested to us that it was their belief that if we had a free trade agreement with the EU, that customs declarations would not be required. That is very definitely not the case. Controls will be in place on the movement of goods between Great Britain and the EU. And the UK government will be implementing full border controls on imports coming into GB from the EU. As James alluded to earlier, we are on the eve of lockdown number 2, and the government have recognised the impact that coronavirus has had on businesses' ability to prepare for the end of transition. So the government has taken the decision to introduce the new border controls in 3 stages, and that will take us up until the 1st of July 2021. So we are going to have a look at those stages now. And stage 1, which will be effective from January, is the ability for importers to delay the submission of their customs declarations. It should be borne in mind that this is not compulsory, so importers can continue to customs clear goods as they arrive, as they do currently for rest of the world goods. However, if you wish to take advantage of the delayed declaration process, there are certain things that you are going to have to do to prepare for that. As bullet point number 1 there says, you will need to keep sufficient records of your imported goods, even though you will have up to 6 months to complete your customs declaration. Tariffs will need to be paid on imports as where there is not a trade agreement in place, but those payments can be deferred until the point at which the customs declaration has been made. There will be checks on controlled goods such as alcohol and tobacco, and businesses will also need to consider how they account for VAT on imported goods. There is going to be a reintroduction of postponed accounting of VAT on the 1st of January. And there will also be physical checks at the point of destination or other approved premises for high-risk live animal and plant importations. And that will be through a series of border control posts. So from April 2021, all products of animal origin, for example, meat, pet food, honey, milk or egg products, and all regulated plant and plant products will require pre-notification and the relevant health documentation. From the end of June 2021, we will move to a situation where all declarations have to be made at the point of importation and relevant tariffs will need to be paid. We will also at that stage move to a situation where full safety and security declarations will also be required. Full details of all these stages are contained in the government's border operating model, the BOM. Hopefully some of you have had an opportunity to have a look at that. The latest iteration, which was version 2 of the border operating model, was published about 3 to 4 weeks ago. And it is a very lengthy document, I think running to something like about 230 pages in total. But certainly something that you should be referring to if at all possible. So I've already mentioned that from January 2021, traders do have an option to use delayed declarations through a process known as EIDR, or entry into declarants records. It's important at this stage, I think, to emphasize that if you do opt to use delayed declarations, there is still a lot of information about the importation that you are going to have to record, and you will need that information to be able to provide the supplementary declaration at a later stage. So your EIDR must contain the information on the slide. So you will need to know the customs procedure code, and you will need a unique reference that will allow the importer to identify the consignment in their records. You need to record the date and time of entry into the records, which creates the tax point. And you need to have a full description of the goods and, importantly, the commodity code relevant to those goods as well. You will need to record the value and quantity of the goods and also have details of all supporting documentation. Another important point to remember is that the supplementary declaration can only be completed by somebody who, by a company that is authorized for customs freight simplified procedures. That can be the trader, or it can be an intermediary acting on their behalf. However, if you are not authorized for CFSP, Customs Freight Simplified Procedures, you will need to apply to HMRC to become authorized if you wish to do the supplementary declaration yourself. Customs have already said that a trader with a poor recent compliance history will not be allowed to use the delayed declaration procedure. And those traders are in the process of being identified by HMRC currently, and the HMRC will write to those traders to notify them and instruct them that they will need to make full declarations at the time of import. So I've already mentioned the border operating model and the fact that it is a very lengthy document. So we have extracted from it the information that we think that you will need and highlighted the pages where you can find the relevant information. So if you're looking for information about EIDR and the simplified declaration procedure, information on that can be found on page 40 of the border operating model. There is a core import process map on page 46. And the core model for importing is on page 102. That is the core model for importing if you wish to carry on entering the goods as they arrive rather than using the delayed declaration method. The pre-lodgement model and GVMS, the Goods Vehicle Movement System, is detailed on page 106. And information about temporary storage and pre-lodgement process maps can be found on page 116. The core model for exporting is page 140 with export process maps on page 146. If we have any hauliers and transport operators with us today, very important that you familiarise yourself with what was previously known as smart freight. It's now known as the check and HGV is ready to cross the border service. Some people think we might have come up with a snappier title than that, but unfortunately that's what HMRC are calling it. So there is information about that on page 152 of the border operating model. If you are a haulier, there is clarification on the documents that you're going to need for EU to UK and vice versa movements on page 209. So what you should be doing for your Brexit preparation, looking if you are trading in goods such as plants, live animals, or any products of animal origin, there are going to be new requirements, and that could include the need to complete export health certificates. So you need to be looking into that if you are involved in the trade of such goods. There will be a number of commodities that will be subject to export health certificates from the 1st of January 2021. And important to say, I think also at this stage, that whilst there is a process to delay import declarations, there is no compatible arrangement for exports. Exports and export declarations will be required from the 1st of January 2021. There is no delayed process for those. If you need further information about export health certificates, that can be found in section 1.2.3 of the border operating model. So some important actions that you should undertake to ensure that you are going to be ready for the end of transition. Understand the requirements of other EU member states. Ensure that you have a GB EORI number and also an EU EORI number if you wish to conduct customs activity in another member state. You need to be thinking about how you're going to submit your customs declarations, whether if you are a trader or an importer or exporter, whether you are going to do the declarations yourself, or whether you are going to appoint a customs intermediary to do that on your behalf. There is government funding available at the moment to train new or existing employees, and that funding is open until July 2021. So if you haven't registered for that, it might be worth thinking about doing that and looking into whether you are going to have to train any of your staff in these new procedures and processes. You need to look into, if you are an importer, getting a duty deferment account to pay any duties that may be due on your imported goods. And think about applying for any customs authorizations that might be correct for your organisation, whether you want to become an authorised consignee or consignor. And if you are an importer, whether there are any customs authorizations that would benefit you, whereby you may be able to suspend payment of any import duties, such as inward or outward processing relief. You also need to speak to EU counterparts to ensure that they are also getting ready for new customs declarations and to make sure that they have arrangements in place for clearing exports from the UK into the EU as well. And very importantly, as I've already stressed, familiarise yourself with the border operating model. Thank you very much for your time on that. And we're now going to move into a question and answer session.
Okay, yeah, thank you very much for that, Neil. Some good information there. there's been a number of questions coming through, and I see they continue to come through also. I think there's a lot of reference in your slides there in terms of the border operating model, which seems like quite a weighty but valuable piece of information to glean a lot of the facts from at this point in time. I mean, from a Ligentia perspective and the Vartan, if there's any support required from anyone on this webinar around deciphering some of those relevant parts, then we will be sharing details at the end of this webinar of how to reach out to us. We're happy to consult and happy to support you if there's any ambiguities that you wish to talk through. One question that has come up before we get into the Q&A is, are we going to share these slides? We have a recording of this webinar which we'll be sharing right after the call, so you'll be able to refer back to it on that basis, which is probably the most efficient way of sharing, and then again you can continually refer back on that link as well. Okay, I think as I mentioned at the start of the call, we had a number of questions before the webinar from some of our customers in the main, and I think we have a couple of slides on Ireland initially, if we maybe start there, Neil, with some of the questions, and then I'll select a few through and I'll feed them back to you.
Okay, thank you, James. Yeah, picking up on some of the questions that we were asked before today, we have some questions relating to the movement of goods between UK and the Republic of Ireland. So the first question is, we import from China directly into the Republic of Ireland and goods shipped direct without entering the UK. We are a UK company and receive invoices from the suppliers, which we pay, and in turn we invoice our customer in Ireland. We quote EU commodity codes on our invoices. Will we have to alter this model in any way? The answer to that is no, that process will not change because the goods are not entering the UK. So you will still be able to ship directly from China into the Republic of Ireland as you do currently. So the second question is that we import stock from the UK all over the world, and some goes to Spain and the Republic of Ireland. In the case of not using a bonded warehouse, or in case we have stock already duty paid that will go to ROI or Spain after the 31st of December, will we be able to claim back the duty paid for stock exported to Ireland and Spain? Unfortunately, no, you will not be able to do that. So the answer to that situation is, after 31st of December, you may benefit from applying to use a customs warehouse, in which case you can hold the goods without payment of any duty charges and export them into Ireland and Spain without paying any UK charges on them. Again, on export to the Republic of Ireland, will we require an export license to send stock from a UK warehouse to Ireland stores? That will depend on the nature of the goods. However, as long as they are not controlled goods, and you can find a list of what HMRC deemed to be controlled goods in Annex C of the border operating model, then an export license wouldn't be required. Will there be additional duty applicable on goods on arrival into Ireland? If the UK doesn't have a free trade agreement with the EU, then there will be duties on imports from the UK to Ireland. And will any additional taxes or VAT be payable on those goods sent to Ireland? Yes, VAT would be payable on imports from the UK into Ireland. We had a question about inward processing. The question was that there is a concern that Brexit will materially affect our costs as we source some products in Europe, bring into the UK for co-packing and then export back out to Europe. We need to identify the potential impact based on previous buying activity and how can we mitigate any potential additional costs. In this situation, you should be able to use inward processing relief to suspend the duty payment. You can apply for inward processing. You need to complete a form SP3, which you can find on the gov.uk website, and that would need to be returned to customs to apply for authorisation to use this scheme. As Vartan, we can certainly help you with that process and guide you through the application and the various controls that you will have to implement and the audit trails that you will need if you wish to operate in wood processing.
Right. Thank you, Neil. There's a few questions coming through now, so we'll just put our live Q&A slide up as we cover those from the session today. One that's come through is, can I delay rest of world import payments of duty and VAT until June?
No, you can't. The delayed declaration process is only available for imports from the EU. So your rest of the world imports have to continue to be customs cleared in the manner that they are at the moment. So you will have to enter those as they arrive and pay duty and VAT as you do currently.
Okay. Next question, it may be a bit of a view needed on this and a bit speculative, but yeah, a bit of a open-ended one. Will my cargo be delayed? Question mark.
That's a really good question, isn't it?
Yeah.
I think inevitably there are such significant changes that will take place on the 1st of January. There are going to be teething problems, and I'm sure some delays will occur. Unfortunately, I don't have a crystal ball, so I can't tell you what those delays may, or how long those delays may be, but I think we have to be prepared for an element of delay.
Yeah, and I think our view in Ligentia would be the same. We've certainly seen delays in the UK and a number of other areas with ports and what have you. So yes, there is a risk, and it comes down to doing as much planning as we possibly can, and that would go for our customers as well. We are seeing a pre-end of year early boom as well in imports, as people try to obviously bring freight into the UK before duty rates change and maybe customs complexities become more as well. So we are seeing a change in behaviour to hopefully circumnavigate these sorts of areas from a number of our customers.
I think that's a really good point, James, actually, that sorry to jump in there. I think it's very much, as you say, about people planning for this and making as much preparation as they possibly can. And I think if you are in a situation where you have time critical goods, then I would certainly suggest that you ensure that you have a stock of those in place before the end of December, because there is inevitably going to be some delay as we try to navigate these new rules and regulations as we get into early January. So if it is critical to your business that you have these goods available, then, as James has already alluded to, it would make some sense to have a stock of those readily available at the end of December.
Thank you, Neil. Here's another one. We applied for TSP. Is that still valid?
It isn't. TSPs have been completely withdrawn, and no aspect of TSP has been carried forward into the new border operating model. TSP was only ever going to be introduced in the event of us crashing out this time last year at the end of October 2019 without a deal. So they are dead, I'm afraid.
Okay. Another one here, can I use EIDR?
You can. I think hopefully I've already covered that in the earlier slides. You can use EIDR. I would suggest referring to the border operating model and checking for details as to how that will work. Again, it is dependent on whether you have controlled goods or not. As long as your goods are not controlled goods as per Annex C, then you will be able to use EIDR.
Thank you, Neil. I can see there's a large amount of questions coming through. We'll strive to cover them all. If we don't get to covering all the questions, what we'll do, we'll commit to responding back within 24 hours on any outstanding ones. But thank you very much for your engagement and discussion at this point in time. I'll take a question here from John. You may cover this, but Turkey and ATR status is an EU status. Is there any update on what the UK may move to?
The discussions with Turkey are ongoing. It's the intention of both Turkey and the UK that there will continue to be a free trade agreement because there is already a customs union between Turkey and the EU. The arrangements between the UK and Turkey are dependent on the UK's free trade discussions with the EU. So at the moment, I can't confirm that we will definitely have a free trade agreement with Turkey going forward. And the assumption is at this stage that if we do, then the ATR document or relative endorsed supplier invoices will continue to be used.
Sure, thanks, Neil. Another question actually from John. Thanks for your engagement, John. Some EU suppliers are ignoring or refusing to accept modified trading terms, Ex Works to FCA. While I can look to appoint an agent in country to handle export documentation, do I need to have an EU trading office?
You can apply for an EU EORI number, John, if you wish to carry out customs activity in another EU member state. That would require you to have a premises to attach that EORI number to. So that could be a solicitor's office or an accountancy office in another EU member state. As regards trade terms, that's obviously purely a commercial situation, which you would need to talk to your other EU trading partners about.
Okay, thank you, Neil. One coming through, or came through earlier from Simon. I don't know if there's a crystal ball one again, perhaps, but do we have any time frame on the implementation of CDS?
Yes, CDS is an interesting one, isn't it? I think the government have to be very careful about the introduction of CDS. Obviously, there are a huge number of people who will be encountering customs clearance for the first time in January, companies that have previously only traded with the EU. And it would seem to be rather unfair of the government to firstly impose customs clearance on them using Chief, and then having got themselves familiar with Chief, they've got to learn an entirely new system known as CDS. I trust everyone on the call is familiar with CDS, the Customs Declaration Service, which is replacing Chief. At the moment, we are being advised that it will come into effect at the end of 2021. The suggestion is from HMRC that there will be a dual running of Chief and CDS for a period of time as well to allow for a handover to CDS, but it isn't likely to happen until the end of 2021 at this stage.
Okay, thank you. Question from Alan around distributing from the EU into the UK. So Alan obviously does this for some of his customers. Business has a plan in place, but has a concern regarding border congestion. Now, the company has AEO accreditation, but the question from Alan is, will his AEO accreditation be beneficial in gaining any preferential process at the border?
It should. In reality, if your vehicle is at the end of a very long queue, whether you have AEO or not, it is perhaps not going to help you much if you are at the end of a queue, but certainly HMRC and Border Force should recognise your AEO status. So if you do have any goods selected for any sort of examination or inspection at the port of arrival, you should receive priority treatment as an AEO accredited business. And we are at the moment in discussions with HMRC about them ensuring that they do instruct their officers to recognise the importance and relevance of AEO and the fact that it is a recognised benefit of becoming AEO accredited that you do get priority treatment by HMRC.
Thank you, Neil. Question from Mike, who ships a lot of smaller consignments into Europe. So this is very much seems to be a small pack courier related question. So currently, Mike's using a courier provider, which is using a 2 to 4 day service. His question is, what impact will Brexit have on him? Will he be able to continue to send out parcels as usual, but just with the paperwork and admin already discussed?
You will still be able to use courier services. I think the important thing is that you discuss with those couriers their readiness for Brexit. They will obviously have to factor into their supply chains and their business models the fact that customs clearance is going to be required. So whether they are still able to maintain their current service levels on parcels that they're moving between the UK and the EU is something you probably need to discuss with them, because they do have to factor in customs clearance both at export from the UK and import into Europe. So their current service levels may not be able to be maintained.
Oh, thank you. Question from Jim. If a company imports into the UK from the EU and then re-exports back to the EU as a business to customer transaction, can they reclaim duty?
I think that comes back to the slide I spoke about earlier. You would need to be looking to use inward processing relief, or maybe customs warehousing to store the goods without payment of customs charges before you re-export them. But certainly, if you need any further advice on that, we would be happy to try and help you to set up the appropriate customs authorization you would need to either suspend or postpone the payment of any customs charges.
Okay. Question from Reese here, who's saying that some of his hauliers who ship his company's goods to the EU have assured them that they will take care of the customs paperwork, but he said nothing since. The question is really, should he take the bull by the horns and assume that he needs to complete it himself, or rely on his haulier to do so? Maybe sort of subjective, I suppose.
I think it's in the haulier's interest to make sure that customs arrangements are made. At the end of the day, there will be a cost to the haulier if his vehicle is stuck in the port for hours or days because of an absence of customs paperwork. We also have to remember that there is the check that an HGV has the appropriate paperwork to be exported from the UK. The haulier will have to apply for a permit to even enter Kent before he actually gets anywhere near a channel port, and there will be fines for hauliers that enter Kent without the appropriate permit. So certainly it's in the interest of the haulier to make sure that all customs paperwork and customs declarations have been done, but there would be no harm in furthering those discussions, I think, with the haulier to make sure that they are fully prepared for this.
Sure. Question here from Tim. Hi, Tim. I'll read this one out. It's a bit of a longer one. We have some internal confusion between title and Incoterms for suppliers in the EU who currently deliver to our DC in the UK. If a supplier states DDP, does that mean that we will have to pay them duty and VAT? And how does the title of goods affect the VAT reclaim?
DDP is best avoided if at all possible. It creates a lot of problems from a customs clearance point of view and establishing who the importer of record is for the goods. The duty and taxes are the liability of the supplier in the event that they are sending to you on a DDP basis. But that does create difficulties when doing the customs declaration if that supplier does not have any representation or subsidiary business in the UK. So if at all possible, I would look to try and change your Incoterm to DAP rather than a DDP arrangement.
Sure, thank you. One from Adam here. We might have covered this before actually, but the question is whether there'll be additional duty applicable for imports from Turkey.
Yes, I think we did cover that earlier. At the moment, it's the government's stated intention that we will have a free trade agreement with Turkey, and that will very much reflect the current EU-Turkey arrangement. We haven't had a confirmation of that yet, because as I mentioned earlier, that is subject to our free trade agreement with our free trade discussions with the EU, because of the customs union that currently exists between the EU and Turkey. I can't say definitively at the moment, other than that is the UK and Turkey's stated intention to continue to have a free trade agreement. We don't have any details of that at the moment.
Sure. Okay, thank you. I've got a question from Jeremy. Jeremy, by all means, drop another question across if I've not interpreted this one correctly. I think the question is around imports from a Czech supplier, which is being delivered direct within the EU, but it's being invoiced to a UK company. Can that still happen post-Brexit? So it feels like Czech to within EU, but a UK party will be invoiced for that movement.
It's still possible to do that. I think you will need to check the VAT regulations, but yes, goods can still move freely within the EU. So if it's Czech to Germany, for example, then that would not require any customs documentation, and that will continue to move as it does currently. If you are invoicing it from the UK, you need to check your requirements as to whether you need to do intrastat declarations for that. I think that will not be required, because the intrastat declaration would be for the Czech exporter to complete, but there may be rules around VAT which you would need to look into.
Sure, thank you. Question from Suzanne. I think it's quite a quick one to answer. Suzanne's asking if she can get her supplier in Germany to import direct to Ireland. I'm guessing this might be a move that comes into the UK at the moment and then maybe goes to Ireland, but is a Germany direct to Ireland move possible?
Absolutely possible. I think we'll probably see companies considering this as an option rather than trying to transit the UK. Germany to Ireland obviously is still an intra-EU movement and would be conducted in the same manner as intra-EU movements are currently. The complication will be is if you route the goods via the UK, you are then sending goods from EU to a non-EU country to transit that non-EU country to return to another EU country. So you're then having to look at the requirement for having transit documents in place for the movement across the UK. But if you can send directly to Ireland and avoid the goods coming into the UK, that would make things a lot easier.
Sure, thank you, Neil. The next one from Seth, I'll read this out again, a longer one, but I would imagine it's something that is going to apply to a number of businesses. So Seth has a sales office registered as a branch in the Republic of Ireland, but produce everything in the UK and ship direct to their customers in Ireland, and often their customers under a plain label. Our Irish customers are then invoiced using our Irish address and VAT number. Will this model still work?
We're probably going to need to do a little bit more investigation into that particular one. Would it be possible we can take that one offline, James, and
yeah, we'll keep a record of that.
Get back to the company that asked that question outside of this forum, if that's possible.
Yep, absolutely. So we'll come back to you on that one, Seth, if that's okay. Question from Jim, which we may have covered before now. Will hauliers exiting the UK via Dover require a permit to enter the Kent motorway system?
Yes, they will. The KAP, Kent Access Permit, as it's going to be known, you will have to apply for that. And as I said before, there is further information about that is contained within the border operating model. But yes, you will need a permit to enter Kent. I think the intention is that what HMRC and the government are trying to do is to avoid delays at the port. So what they want to do is to ensure that the export customs clearance and all the relevant paperwork is completely processed before the vehicle gets to the port. There is going to be no capacity at Dover for vehicles to be held there whilst export documentation is checked. So it's very important that that is all in place before the vehicle gets to Dover, which is why they have introduced this Kent access permit.
Thank you very much. Question from Lee. Hi, Lee. It's a niche one, Neil. But certainly a very valid one for this business. How will the GSP Plus agreement currently between Pakistan and the EU affect the UK from the 1st of Jan?
The UK, there is a list on the gov.uk website. If you Google UK trade deals, you will find that the UK has already signed up to a number of trade deals with other countries. Many of those reflect the current EU arrangements. So I would suggest you try to look at that to find out whether the UK, I don't know off the top of my head whether we have an agreement with Pakistan at the moment. I think it was Pakistan that was mentioned, James, wasn't it?
It was, yes.
Yeah. The UK global tariff has been published, and it contains the duty rates that will be applicable in the event of there not being a trade agreement in place. But GSP and GSP Plus will continue. You just need to check whether the UK has already got a signed agreement in place with the country of origin. But as I said, you can check that on gov.uk.
Stuff. Just picking out a question here from Gabrielle, maybe a political one, but I think it's quite a good question. Is there any possibility of an extension with current lockdown measures with the pandemic?
It doesn't appear so. I watched Mr. Johnson over the weekend and looked through the press on Sunday, and there, rather disappointingly, didn't seem to be any reference to Brexit at all. So it would appear that we are definitely on course for an end of transition on the 31st of December, and there doesn't seem to be anything coming out from government at all to suggest that that's going to change. So I think it's important that you plan for that date. I appreciate that that's going to be difficult as we enter another lockdown period, but other than the staged phases that we spoke about earlier in the presentation, other than those, there is nothing else that we know of that is planned to assist businesses in any way. So I'm afraid despite the lockdown number 2, you are going to have to prepare for an end of transition on the 31st of December.
Sure, thank you. A broad question here, but very relevant to everybody on the webinar, and that is: will commodity codes change when importing from the rest of the world?
Commodity codes are not changing. Duty rates have changed, so I would recommend that you look at the new UK global tariff. The HMRC and the government have reduced a number of duty rates. They have also done a process of simplifying duty rates. So where a duty rate, for example, might have been 5.6% previously, the 0.6% will have been rounded down. So under the UK global tariff, there will be no part percentages. Duty rates will be a full percentage. But as I said, many of those have been reduced to 0. The government have also removed what they term nuisance tariffs. So tariffs that had previously been 2% or under have also now been eradicated. So very important that if you are importing from the rest of the world currently, you check the UK global tariff to see what impact that has had on your duty rates for next year. You might be pleasantly surprised to find that some of them have been reduced.
Thank you, Neil. Looking, there's still a lot of questions still coming in, which is great. What I will do, so I want to make sure we get through as many of these as we can. I'm happy to run to sort of 5-10 minutes over just to cover as much as possible before a wrap up. But there's two that's coming in, well, that have come in now that are maybe as much for me to answer yourself, Neil. So one from Deborah: can forwarders support our customs declarations, both import and export into the UK? Yes, absolutely. That's something that we'd be very happy to discuss with you, Deborah. There'll be contact details on the final slide of this presentation, so please jot those down, and we can gladly have a conversation on that with you. And then there's one from Georgina in terms of how you accurately work out commodity codes. So again, this is a piece of work that both Ligentia and Vartan will do, with accurate descriptions from our customers to support and help on classifying relevant commodities. So again, if there's something there you need support with as a business, then feel free to send an email to the contact details at the end of this webinar, and we can pick that up as a conversation with you as well. Okay, and on to the next one, which we've already answered. One from Tony. Thanks for the question, Tony. Can we apply for an EU EORI before the end of transition period? And which UK country, and which EU country is the best to apply in? If that's...
You can apply before the end of this year. You can apply now. The country you apply in, there isn't anywhere, as far as I'm aware, that is any easier than any other country. Once you have an EU EORI, irrespective of the country that it's issued in, it's valid in all of the 27 member states. I think the best thing to do is to probably apply for the country in which you are intending to carry out your customs activities. So if, for example, you wish to try and arrange your own customs clearance in Calais, apply for a French EORI number. That French EORI number would be recognised in all other EU member states.
Great, thank you very much. Got a couple of questions from Carla here as well. Thank you, Carla. The first one, Neil, is on postponed accounting, particularly relating to import VAT on the VAT return. Now, Carla wants to know what she needs to do within her business to take advantage of this.
If you are a VAT registered business, you can use VAT postponed accounting from the 1st of January for all imports. It will require a different method of payment code on the C88, and that method of payment code will be a G. So where currently you would put a method of payment code F or B, indicating either deferment or FAS account, you will put G in to indicate that it's postponed accounting, and you will then have to account for the VAT on your VAT returns.
Thank you, Neil. And the second question, Carla, on the exports to the EU and what support Ligentia might be able to give you with regards to this, particularly with the VAT. I think it'd be good to take that up as a discussion. If, again, you reach out to the email that we'll leave at the end of here, we'll make sure we make contact with you in the next 24 hours to pick up that as an area of discussion. So, yeah, absolutely. UK exports into the EU is something we do a lot of, work with a number of customers across a number of sectors, as I was saying before, so I'd be very happy to pick up that conversation with you and just dig into a bit of the detail. If you share your contact details with the address on the final slide of this presentation, that would be great. Okay. One question here from Alex, which is, apart from the cash flow, are there any other specific commercial benefits to EIDR?
That's a very good question. I think the main benefit and the reason why HMRC have introduced this facilitation is that they acknowledge that some businesses will have struggled this year because of the various lockdowns we've had because of the pandemic, that businesses that had only previously ever traded with the EU are not going to be very familiar with customs processes. So I think the intention was that rather than those companies having to try to battle with this on the 1st of January, that customs would give them a period of grace to become more familiar with the process. I can't see any other financial advantage other than the fact that you are going to be able to delay payments of any duties that may become applicable. But I think if you are struggling to come to terms with understanding putting customs clearance arrangements in place, then it may be advantageous to take advantage of EIDR.
Sure. Question from Jim. I've got a few Jims on the call, it seems. The question is, if we decide to treat our European imports in the same way as our rest of the world imports, i.e. Jim's using his forwarder's deferment account and paying the duty and VAT on arrival in the UK, it seems, does he still need to appoint a customs agent?
Sorry, I'm not sure I fully understand that question, James. Sorry, an agent for...
for customs clearance. I wonder if you might want to elaborate, Jim. It feels like maybe Jim has a customs agent and the forwarder who may be separate parties.
Yeah,
I don't know. I wonder if it's maybe a prepaid import and then a third-party agent.
Yeah, a third-party customs intermediary or customs broker will certainly be able to do your European declarations as well as your rest of the world declarations. However, it's very important that you talk to them about their capacity, because we are aware that a number of brokers currently are going to experience a huge increase in the number of customs declarations that they will be handling next year. So I would recommend that that everybody, other than just Jim, that everybody talks to their, if you are a trader, if you are an importer using a customs intermediary, to make sure that you've discussed with them their capacity and their ability to handle all of your declarations next year.
Okay, thank you very much. Quick question here from Charles. Do Incoterms remain the same?
Yes, they do.
Okay. Quick one.
Worth bearing in mind, obviously, that currently a lot of people are using DDP for intra-EU movements, and obviously at the moment that doesn't have any implications, but please bear in mind that DDP will have significant implications if we are in a situation where we don't have a free trade agreement with Europe. So be aware of the implications of some of the Incoterms that you're using.
Sure, thank you very much. Question from Jerry, and this is related to the movement of medical devices. He's asking regarding CE and Brexit formalities. Are you able to, as Vartan and Ligentia, I suppose, but from a Vartan perspective, I think, are you able to advise on CE/Brexit formalities for these kinds of products?
Yes, and again, I think we would need to take that one offline, James, and have a separate discussion with Jerry about that. Obviously, sure. A number of regulations with regards to the marking and labelling and packaging of goods are going to change, but we do have some information about that we can share with Jerry. So maybe we can take that as an offline discussion with him if that's possible.
Great. Yep. So if you can just wait for the final slide, Jerry, you'll find that contact email. So please send an email in with your contact details, and we'll contact you within 24 hours to pick up that conversation. But thanks for the question. A slightly different question here from Bernard, which is, how do we access funding to train a member of staff to handle our customs declarations? Is funding available would be the first question, I suppose, to that.
Funding is still available to train staff as long as you are completing or intend to complete customs declarations. The scheme is being administered by PwC on behalf of HMRC. So probably the best way to find the website is to Google search Customs Intermediary Grant, and that should take you to the relevant page. If not, we can share that that website information with you if you want to contact the email addresses that James is going to put up in a moment.
Sure. And we have a question from Leah, which is whether certificates of origin are required for all imports.
Certificates of origin would not be required for all imports, but obviously if we have a free trade agreement with Europe, there will be the necessity to be able to prove origin of product. And I understand there is going to be a new form. So for example, if you are exporting goods from UK into Europe and you want to take advantage of a free trade agreement, if we have one, then an origin certificate will need to be issued for those exports. It is going to be a new form. We think it's going to look something like a current EUR1 document in appearance, but we haven't actually got any confirmation from HMRC as to what that's going to be at this stage.
Sure, thank you very much. Question from Leslie, which again is another ramification involving Ireland and different ways of transit. So it seems that Leslie has full load coming in from Germany into the UK, 50% of which, this is a bit like sort of a GCSE question, 50% is offloaded of this product in the UK, and then the remaining 50% goes to the Republic of Ireland. Question is, can we move the Irish part under transit? Yes,
you can. You would need to do a transit document for the goods that are not remaining in the UK to take those through to Ireland. However, you will need to use an ETSF or a customs approved area to remove the cargo from that's remaining in the UK.
Sure. And I'm just trying to pick out the last one or two here, very wary of time, but we still have a lot of people on the webinar. Good one from Sarah, which probably covers most of the people on the webinar here. And it is, if she decides to ship directly from to the EU from China rather than the UK, so it looks like the stock at the moment goes into the UK and then will go to Europe. What does she need to have set up so she can import directly into Europe instead of into the UK?
That I think is going to be determined by the circumstances and whether you still want to be shown as the importer or not. I think there's quite a lot of complexity around that one, James. I think that's maybe one for us to follow up with that particular company after the event to help them plan for that.
Yeah, there's a secondary part of Sarah's question as well, which is in terms of her shipping agents and can they do this? I mean, from a Ligentia perspective, we work with a number of customers in this way already, and we've seen a transition between people avoiding the UK as kind of a middle point for transit into Europe already. So, you know, we are operating warehousing and we are delivering direct into consignees in Europe. Quite often the freight is actually controlled from the UK and paid in the UK. So it's something we can help with. But as Neil says, if you can maybe send an email to the details we'll give very shortly, then we can again pick up that conversation with you pretty quickly. Thank you. And I think if we can touch on probably one last question, and then we'll have to get back to everybody else within 24 hours on the remaining questions. I'll pick a question here from Lachlan, which is, how can we import a product from the EU and ship direct to our UK clients without them seeing the costs on the paperwork? So he's trying to miss out the product coming into himself and go direct to customer by the looks of things.
Okay, that's going to need a bit of thought as well, but you're going to have the correct information for your customs declaration in the first instance, and assuming that you are going to be the importer, then you will declare the value to customs for your customs entry. I suppose the answer is that you ensure that the supplier does not actually attach any paperwork to the consignment itself if the consignment is going to arrive directly at your customer and not go via yourself, and make sure that the paperwork is sent to yourself so that you can arrange customs clearance, but try to ensure that no paperwork is forwarded with the goods themselves. I don't know if that answers the question, or if not, we can pick it up after the webinar and maybe have some further discussion around that, or whether that's a Ligentia issue, James, if you would be moving the cargo. I'm not sure.
Yeah, again, I think it'd be worth for some elaboration and on all of these questions. We will give the details to contact us on the back of this, and as I say, we're committed to turn around the answers, or at least pick up initial discussions within 24 hours. To say it customs related, we work in partnership with Vartan. We are AEO accredited ourselves, and we have our own in-house customs experts also. So we have a dedicated team of people across in-house and Vartan who can pick that up. But I think from my perspective, that's a really productive Q&A. I can see I have 22 questions here still outstanding, so we've got a record of those, and we'll come back to you on those. I'm looking to move to the next slide, if somebody could let me do so, or press the button on my behalf.
There we go. Sorry, James, I'm still controlling the slides.
Excellent. There we go. So really, just by means of a wrap up from our side, if you could just go back one for me, Neil.
Sorry.
Thank you very much. So by means of just to wrap up from our side, we hope you found that informative. As I say, we clearly wanted to present the facts rather than speculation, as it were. In terms of next steps, we have our next webinar coming up on the next slide. There we go. So our next webinar will take place 2 weeks today, same time, so on the 18th of November, Wednesday, at 11 o'clock. In terms of registering, you can register online at ligentia.com. We'll also be very active on social media, LinkedIn in particular, to get those that information out there. We're looking to touch on trade deals within the ensuing weeks as we get towards the end of transition. More and more information is going to be coming out, and we want to really pick that information up and create a very tangible webinar that covers that, and hopefully has the same uptake and same value as today has had. We also have a weekly newsletter, which will provide details on how to register, but very much the same process that you've followed this time. This webinar is going to be shared as well on YouTube, Twitter, so I'm referring to notes here, and LinkedIn in terms of the video content. So if you want to play this back, pick up any information from the slides, then please feel free to do so. And please refer to the email at the bottom of the screen. So this is hello@ligentia.global. This is an email that myself and our marketing, our head of marketing, will be covering as well. So we'll see any requests coming into here, and we'll be personally responsible for making sure that we get back to you on those terms. So I think it just remains for me to say thank you very much indeed for your time, for your engagement. We hope it was of value, and we hope to see you all in 2 weeks today, when hopefully there's a lot more detail that we can divulge in a follow-up call. Thank you very much, and have a great day.